Welcome to the REI Hacker Podcast, where we unlock the secrets of real estate success. Join us as we dive into the journeys of top investors, mentors, and industry experts. And now, let's hand it off to our host, Benson Juarez.
Welcome everybody. Thank you so much for being here on this edition of the REI Hacker Podcast. Super excited for my next guest. His name is Ben Kogut. Ben has a 20-year career. He has a 20-year career in brokerage, development, and syndication across multiple verticals, including retail, office, medical, and industrial. He earned his CCIM designation as the youngest professional in Austin ever to do so, and later founded Rooster Equity Partners, inspired by his family name Kogut, which means rooster in Polish. Ben has been featured in multiple leading industry podcasts where he shares practical, no-nonsense insights for both new and experienced investors to help them build predictable, passive wealth. Ben, thank you so much for being here. I appreciate it.
Yeah, an honor, Benson. Thanks for having me.
You got it. So when you got started in the industry, and you were the youngest broker in the state for a time period there, what got you interested in real estate to start?
Yeah, great question. I have great mentors. I give them a lot of credits, and people who I have been blessed to meet along the journey, and they are very successful in the commercial real estate space. And so I latched onto them and have been absorbing as much as I can, basically throughout this last 20 years of my career. So I think that having great mentors is really one of the best ways to accelerate in this business. Yeah,
I agree. I think it's indispensable to, helping to avoid dips in the industry or avoiding mistakes. Is that part of the reason why you decided to start to put yourself out there and get on podcasts, is to help others?
Yeah, exactly. Yeah, it's the podcast has just been a wonderful way to meet other people like yourself and get access to other investors, to share the wisdom that I've learned from my investors and from my mistakes along the way. And, I think it's just part of the business that we're in right now. You need to put yourself out there. And so this is part of that journey.
Do you think that commercial real estate is conducive to those kinds of relationships? Because I've always heard it's like a good old boy network, right? And there's a preservation aspect to it where they don't want to share all their ideas because that's going to cut into their potential success. Do you find that to be true, or are you finding the opposite?
Not at all. I mean, there is definitely aspects of a good old boy network, but I live with an abundance mentality. I think there's enough opportunity for everybody. And so if somebody had that type of mentality of, wanting to, hold all their information close to the chest, so to speak, I think that it's just going to be limiting not only to themselves but also the industry in general. So I'm more attracted to people and I track people who are more transparent and open and friendly and, more coming with this from a giving perspective. And I just think that's just a better general way to live in life.
Yeah, I think so too. Way less stressful that way. Are you part of any professional networking groups where people get together and maybe they're paid or non-paid, but they share, they share experiences? There's some mentorship involved. Are you part of any of those?
Yeah, I about every other month, call it 4 to 5 times a year. So it varies. I am a part of an invite-only group that they capped it around 100 to 120 people at the meeting, and we meet in a different city around the country. I was just in Atlanta last week. I was in Plano the time before, Denver, Salt Lake City, Tucson. So it really bounces all over the place. But really, it's a group who, since it's invite only, it's very very transparent. We meet for about 2.5 days, and we work on exchanging equities. I raise a lot of capital amongst this group. There's a lot of high net worth individuals. There's a lot of people like me who are there, who are raising capital and syndicating commercial real estate. We find ways to literally trade, equities. Sometimes I've done a multiple way exchange where somebody might have a house, could exchange it for equity in a triple net investment property, could change it for a piece of land. So it really is, an advanced way to get deals done, and sometimes in very creative ways.
I haven't heard that much about trading equities. That's pretty high level, right? Because even just low level investing is, pretty complex for most. Syndications or buying, being an LP in a deal, still pretty high level for most. But this is even higher than that. How do you create a 1-to-1 ratio there, like a dollar for dollar? Like, how do you create the form of currency so you know what to trade?
So you'll know roughly what the value is. So we'll look at how much is the value of the property, how much is the debt, and how much equity is the delta right there. And so sometimes you may need to bring more cash to the table to balance it out, or bring other property, or bring literally other assets. It doesn't necessarily have to be real estate. And so if you get creative, you think outside the box, and you think about it from a perspective of, there's no wrong properties. Sometimes there's just wrong ownership. And so figuring out who and how to connect those dots so that ultimately the pie is bigger. Mm-hmm. So for example, let's see here. So one of the deals I did was I owned a single tenant condo in downtown Austin, Texas. I used to live in it. Then I rented it for a while. And I was like, I'm done with dealing with tenants personally. So I was able to take the equity I had in that, do an exchange. That was a 1031 exchange. And someone else in the group said, hey, I have a portfolio of, this is going to be complicated, but it's their notes on 27 double wides in South Carolina. And so he was able to convince the seller of those notes. So basically this guy had bought a piece of land, put a double wide on it, and then seller finance it to that, person that was occupying that property. Then he had accumulated 27 of these. They're all cash flowing for, they were seasoned, some more than others. And so we wanted to buy that portfolio. And so we used the equity that I had in my exchange, used that as a down payment with the seller of that portfolio. And then that seller financed the rest of the assets, the properties. And so we were able to, you look at the numbers, we were looking at somewhere around a 20% return. And not only that, but since we're creative, the seller didn't really want monthly payments. He just wanted 6 annual lump sum payments. So instead of making monthly payments to him like a normal loan at a normal bank, we were able to get him to say, you know what, I'll just take 6 lump sum payments once a year for the next 6 years. And so that was, and the cash flow has just been extraordinary. And just one little example of some ways that we were able to trade equity in one deal into equity for another project that's now, paying me probably 3 to 4 times more in monthly income than I would have if I just kept that condo.
Wow. Did you have to refinance the condo, or could you just leave the cash in it and just create a note on it for the seller?
I sold it. It was time to be sold. I saw that the HOA was, killing me with these assessments, and I just honestly, I don't really want to own any real estate any residential real estate besides the home that I currently live in.
Got it. And you mentioned earlier too, you can use any asset as an equity transfer, and you see this a lot in this space where people are using their skills. So like your skills as a fundraiser, you might partner up with somebody who's just good at finding deals and underwriting them, but you're bringing to the table your ability to just go find money.
Okay, yeah. So that's another big part of my business is raising capital and syndicating projects. So our niche is, as you mentioned earlier, commercial real estate that's occupied by triple net leased tenants. So said another way, if for someone that doesn't know what triple net is, it's the net of the taxes, the insurance, and the maintenance costs. So instead of me as a landlord being responsible for those expenses, they actually, in the lease, they very clearly become the responsibility of the tenant. So, for example, we bought this earlier, I think it was in May, we bought a single tenant industrial building in San Antonio. And this building had a tenant that had around 12 years left on the lease. And we were able to buy it close to like a 9.5 cap. And the tenant pays us rent every month. And then they pay the taxes, they pay the insurance, and they pay, if there's some maintenance issue, they cover that. So it helps us make our revenue, our NOI, much more predictable, so that we ultimately can structure it in a way where, so then I'll raise money. We raised a couple $1 million on that deal, and the investors will know going in right up front that they have a long-term lease tenant that has a good credit rating, so they're strong. We have pretty darn high, probability that they're going to stay there for the next 12 years. And, the investors will get monthly distributions out of that monthly check that we get. So they're really, truly passive in these deals. And that's what I'm trying to help people understand, is that you can invest in triple net commercial real estate and have all the benefits of monthly distributions. You also get depreciation benefits, and they literally do nothing except, collect the check and get quarterly reports. So that's, I've seen a lot of people raise money and do residential or multifamily, but that has been way more volatile than what I've seen in the triple net space. So that's what I'm sort of trying to get the word out about. And I just don't see as many, you're doing podcasts. I'm curious if you had any other triple net syndicators on here, or what have you seen? Maybe if you don't mind me flipping it back on, I'd be curious what you've seen.
So I've got over 130 episodes right now, and probably the last quarter of those were focused on more like syndications and fundraising in that space. And the majority of them have been multifamily, but it's kind of a blended portfolio you'll find, or that they're doing, is some of it is in the industrial space, retail and triple net, single tenant type buildings like you're doing, but not many. So it is a smaller portion of what I've seen so far, but that might just be how I'm finding my guests. But there's some people out there doing it.
Yeah, there's definitely people doing it. I just literally don't see people talking about it on the podcast or on social media. And so I just hired a company to help me tell that story a little bit better on social media, which has been difficult, but I've started to see positive results from that. So
yeah, there's an education gap there, because the people on social media that are consuming social media are sort of like the passively, what would you call that, entertained individual. Like they're just kind of just killing time. So it's hard to find that message that's going to, perk their interest or pique their interest when they're just scrolling, right? Like the people that are out there, who have the funds, who are actively looking to invest in alternative type strategies, maybe wouldn't be consuming social media. So it's like a hard bridge there. When I think about it, like these are professionals, they've got liquidity, they've got some understanding of investing. Maybe they're not on social media. I don't know. It's going to be difficult, I think.
I think almost, I don't know what the percentages are, but I do think that the wealthy people I know, they are on social media. They use it. The amount they use it is variable, but
right.
The investors are out there. The people, it's just connecting with them and educating them, and making sure that the scary part of investing in commercial real estate is not so scary, because it really is, to me, a lot less scary than other asset classes personally.
Yeah, that could be true. I guess time will tell how it goes, but I think you have the capability just by us this short conversation of bridging that gap, because you're not speaking another language right now. Like just in the way you described a triple net lease, I think the average person can understand it. So if you keep doing that with the help of this this consultant you hired, I think you can probably do it. And you don't need a lot of people either. Like you just need, obviously you're going to create a funnel, right, of people to come into this thing who are interested in the space. You're going to set up meetings. You're going to filter it down even more. But if you could just gain, 2 or 3 new people a year or a month or whatever the time frame is, it'll be a worthy investment for you.
Yeah, agreed. Yeah, we're not we're more like less is more.
Yeah.
So we're not trying to just have, it's $100,000 minimum to get into one of our deals. So, we raised $110 million from 200 people. So I don't really need any more people per se, but I do want to, create more educational content just to make it, if there are people that want to participate, that's fine. But at the end of the day, I think that there's just this, like you said, a huge gap in the education in this particular niche. So I'm trying to give it a shot and put it out there.
Is there any plans of creating some sort of an educational component to it? Not just, putting the message out there via social media, via podcast, but something where you bring people into a community where they can learn and be part of something?
I wrote a book, which were some of the top lessons I've learned through my 20 years of investing in commercial real estate. But as far as like creating a mentorship program or mastermind, I'm not interested in that. I make my money taking care of other people's money by investing in commercial real estate. That's where my focus is. So if I had more time, maybe I'd consider that, but it's not really. I mentor people. I'm happy to do that. I love to answer questions. I do a lot of, I do create content. I've written some books, but as far as like trying to like sell membership to something, I'm not interested.
Yeah. Yeah. I'm part of a group called Avestor. Have you heard of that?
So Avestor, the customizable fund.
Yeah.
Yeah. Okay. So that's where my Rooster Equity Fund is based.
Oh, there we go. Very cool. So let's talk about, the strategies you're doing now. So you have this, doing the triple net stuff, but I read someplace that you're doing a new project where you're trying to convert one of your projects to some other strategy. I don't remember the details, but it was. Do you know what I'm talking about?
I'm not sure which one you're referring to. We got a bunch of different projects going on.
Yeah.
Where'd you read that?
Oh, it was some of the research that we did here. Let me see if I can find it. I'll come across it here in a moment. So
maybe I'll share with you like what has gotten us here and maybe where we're also going. So yeah. So I before I joined Avestor, I was head of capital raising with a syndication firm based in Wichita. And we, from 2019 till 2017 till 2022, raised $110 million, bought over 35 triple net properties. And those are mostly in ownership still. And then it was time, what I wanted to do was, with Avestor's help, I did a lot of research before I chose Avestor to continue to grow the portfolio and do it in a way that allows me to pick and choose the deals that I want to do, as well as Avestor allows me to partner with some of my friends who have great deals, have deal flow. They just don't necessarily have the time or the network or the resources to raise the capital. And so we recently bought a portfolio of shopping centers, and a friend of mine said, "Hey, this is a $17 million deal. I feel confident in raising, $2-3 million. Would you feel like you could bring the rest?" So that's what we did. I structured a deal where we got some preferential returns and went to my investor network, raised the capital, raised $2-3 million bucks, and came into that deal as a single LP with some rights. And all the investors that are that funded our basically single check are now getting the benefits of participating in a project that they wouldn't normally have access to had it not been for me being able to provide the opportunity and doing the due diligence and putting all the pieces of the puzzle together. So we do that where we'll come in and we'll participate in other people's deals. I also have an acquisitions team, and we are buying deals where we manage it in-house. The management is the asset management is mostly we don't have to actually physically manage the properties because the tenants typically handle that. So really it's a matter of, sometimes we have to negotiate leases. We did a deal recently, as an example, where it was an industrial building. The tenant had about 6 months left on the lease. And so we knew, because I talked to the real estate director, that the tenant wanted to stay for at least another 15 more years. And so what they wanted was a couple $100,000 of TI to fix up the flooring, to do some new paint, just to kind of spruce the place up. And the seller thought they were about 6 months away from having an empty building. And so this was occupied by a major national industrial tenant brand. And we came in, put the deal under contract. While we're under contract, we negotiated a 15-year lease extension. And then before we closed, we, raised the money, put some debt together. We did about 50% leverage, and then bought the property and just cash flow that thing. So there's multiple ways to do it. We also do a tiny bit of development. So if we have a tenant who wants us to, it's called a build to suit, where they say, hey, like we're working with a national publicly traded company that we've become a preferred developer for. And I have a team that's handling the development projects. And so we will tie up a piece of land, negotiate a 15 to 20 year lease, and then hire a civil engineer, general contractor, architect, so on and so forth, build the building. And those typically, we typically sell them as soon as we're finished building them. So those are 3 of the 5 different things that we've been working on.
Is that the same thing? So I found that item I was looking for. So you have this multi-tenant shopping center that you're repositioning to get stronger cash flow. Is that something different?
So that is a reference to that multi-tenant $17 million shopping center that we bought.
Okay.
Where the repositioning was that we needed to redo the surface of the parking lot, paint the facade of the shopping center, and improve some of the landscaping. And when you do those, it just transforms. It completely transforms the look and feel of a shopping center. And
I've seen those.
Yeah. So you're in Denver. So think about what part, I don't know what part of Denver you're in, but think about, near your house, I'm guessing there's a grocery store. And in that grocery store, there's probably a liquor store and a nail salon and a bank and a restaurant or two, I'm guessing,
Yeah.
So pretty typical. So yeah, those are examples of triple net leased tenants. So those tenants are going to be responsible for the taxes and insurance. And they're usually on long-term leases, somewhere between 5 to 15 year length. And think about, the house you grew up in, and you go back to that old house, depending on where it is, odds are a lot of those tenants that you grew up with, even 20, 30, maybe 40 years ago, they are still there. And maybe they've changed a little bit, but shopping centers are, at least in here in Texas, they're over 95% occupied across the board. In Austin, they're actually 98% occupied.
Wow.
So there's very little vacancy. That causes rents to go up because new tenants that are coming to the market, have to know that they have to pay higher rents because there's not a lot of space. So like this is the type of stuff that I'm seeing right now.
So were you operating during COVID?
Oh yeah.
So I know there's a lot of challenge there because people couldn't go out and go to stores and restaurants. And so a lot of businesses failed, whether they were restaurants or, just a place where you go to, buy something or get a service. How'd that affect your business?
It was extremely positive. I hate to say it, but COVID, yeah, for sure. There were unfortunate situations where businesses shut down, but in a lot of cases, what we did back then was we would basically pause the tenant being required to pay rent, and in exchange, we added lease term. So I think we did like for a month of no rent, they would add another year of term on the backside. So we would get the extension, and obviously it depended on the tenant, but there was a lot of creativity here in Texas. Things didn't shut down as much as they did in other parts of the world. So I think it's been a complete net positive. I wouldn't compare this to like a New York City or some other more urban cities that got hit a lot harder. But back then, during COVID, when interest rates were significantly lower than they are now, people were scared, and that created a tremendous amount of opportunity for us. So we, found investors who were selling at completely irrational prices. They may have been hurt in one part of their portfolio, and that forced them to sell what we ended up buying at a pretty steep discount because they needed to get out of it. And so, there's quite a spectrum of what the results were from COVID, but overall, it stopped a lot of development, especially in the triple net space. And so that has caused valuations to go up even higher because it's we haven't caught up yet to the demand of retail. So it's in general, retail's been a triple net, industrial, medical, even restaurants have everything's not everything, but most everything is up quite a bit right now.
So which segment of retail is hurting the most, do you think?
So anything that has to compete with Amazon or online is no longer a thing. So, and we don't buy big indoor malls like Simon, Galleria type malls. We're buying more like strip centers that are anchored by grocery stores. So, I think, shopping centers, I think as a brand needs to be rebranded. I think, we could call them lifestyle centers or, service centers, but really when you go in your car and you go to your local grocer, or you're driving down the street and you see, you'll see just like those typical, like the franchises, you'll see, the nail salons and the dentists and the vets. And, these are tenants that are not going to be taken out by an online business. So that's how the industry has shifted, and it's been quite a net positive in that way.
Yeah, I was just watching a video recently about Circuit City and how their whole model collapsed over time, and then the Best Buy came in and kind of took over because they had some new ways of running a big box store, like for electronics and appliances and stuff, and so they took over, but now they're being hurt, right? So is that the example you're talking about? Is like even like the Best Buys of the world are going to start to slide because people are buying a lot of that stuff online.
Yeah. So in that example, the Best Buys of the world changed their business model, and they are less a place where you go to buy a TV, and they're more of a place where you go to look at the TVs and see, which color or whatever do you like better than the others. and then you go online and purchase it. So they have flipped their business model over, and they charge basically rent, for lack of a better word, to Sony and to LG and to so on and so forth to be able to display their products at Best Buy. You'll go in there and you'll see like a little mini Apple store, as an example, where you obviously can go online and buy some AirPods or a laptop. But if you want to go and kind of experience it, feel it, and touch it, they literally rent space within Best Buy's, because Best Buy has, found B and A locations over the years. And so that has been able for them to be able to pay their rent to the landlord. And it's not to say that there aren't going to be some that are closing down, but that's just one example. So I office in downtown Austin, and Whole Foods is across the street. That's the Whole Foods headquarters. I'm assuming you have a Whole Foods near you.
Yeah.
Right. So if you go in there, go to, let's say if there's a sushi department. So the one here in downtown Austin there's a sushi, area. And the reality is that sushi is those employees don't actually work for Whole Foods. It's another company that's in charge of sushi that rents that space and kind of looks like they're Whole Foods, but they're actually just renting space within a Whole Foods. And then, so like these are little examples of how retailers are, adapting in today's world.
Oh, yeah. It's changing so quickly. I saw some other videos recently of Walmart like delivering items to people's houses, and they have that little tether that comes down and it opens up and drops it. And I haven't seen that in my area yet, but I'm seeing it online. So it's coming. Like things are just changing so quickly.
Yeah, I was in Atlanta last week, and I saw these just like little robot mini, not cars, but like little mini things that are just driving around delivering different packages to different people around the town. So yeah, things are changing. And, retail is, a lot more, convenience, in the world of Uber Eats. And so like, for example, Chipotle, as an example, they now have a drive-through they call Chipotle Lane. And Chipotle Lane is, unlike like old, restaurants where you go up to the window, you order your stuff, you drive to the next thing, you pay for it and get it. Chipotle Lane is you go on your app and you say, I want this rice and this beans and chicken or beef, whatever. And then you just go up to the Chipotle Lane and pick it up and you keep moving. So there's, that's another example of how, restaurants and retail has changed.
Oh, yeah. And now AI is coming, right? And AI is already involved in your industry as well, because it's pretty important in some people's businesses for doing underwriting, valuation, due diligence. Do you see any sort of like, maybe they're not completely non-transferable, but some non-transferable human skills that will shield your role and, the commercial syndication model from being overtaken by technology completely?
Absolutely. So we use AI as much as we possibly can. We've created our own ChatGPT, GPT for acquisitions, and it basically gets us 80% of the way there. So we'll take a deal, we'll pop it into the GPT, and it will spit out. We spent weeks, hours, days, weeks, months training it how we think and how to analyze a deal. And so it instantly will spit out basically the result of what could work for us. So that's one example. Number two, we use a service called Placer.ai. Placer is a product that allows us to, or what they do is they use cell phone data. So the cell phone that's in your pocket, we just inherently know that we're being tracked, right? And so they use that to the benefit of wisdom, some knowledge that allows us to see, okay, when we're looking at potentially buying a property and it has a major national tenant, how does that tenant do compared to other, in that chain? So we'll use Chipotle as another example. So if there's, a lot of Chipotles around town, it literally will tell you based on cell phone data and how often and who and when people are going to that Chipotle. How does that location compare to others in the chain? And so that's one way that we're also using AI. And finally, am I worried about AI replacing me? Not at all. I think it's, at the end of the day, I'm in the sales business. I sell commercial real estate to investors who are looking to own a piece of a triple net project. And at the end of the day, I think relationships and people to people is how we do business. And yeah, that's how I feel about it.
Yeah. Yeah, I agree. I think that last point of the process, or at least the different segment of the process of fundraising, is a relationship business. They have to trust the GPs of the deal. They have to trust the people who are going to run it. And AI can only go so far in that space, but it'll start to creep in. Because part of like some of the AI I'm seeing now is like texts, and there's some chat bots now that people can interact with to get some basic questions answered about a deal. But that only gets so far. That's just kind of like their due diligence that they're doing. But then at some point they have to talk with someone to decide whether or not they're going to write that big check.
Yeah. And on top of that, at least from where I sit, I don't take just anybody's money. So they can't just interact with AI and then wire in funds and they're in the deal. Like I need to learn more about them, build some rapport, find out what their goals are. There's going to be questions inevitably that aren't as crystal clear from AI. So there's a lot more to it than just. But I do think that there are a lot of AI tools that are going to make the educational part a lot easier. The scaling part, we're almost there. It's like you can still see AI, and it just feels very AI and inhuman and distant.
Mm-hmm.
I think it's just going to get better over time until that will pretty much be something you can't tell. But for right now, at the end of 2025, we're almost there, but not quite there.
So thinking about technology again in this space, there's another vertical that a lot of people think that this is going to move to, syndications is going to move to the blockchain. Do you see that happening soon? Is that something that's on your radar as far as being able to basically like split up pieces of real estate and then put it up on the blockchain and then have people buy pieces of it, and then actually to make it more liquid, right? Where they can transfer ownership without having to sell their shares?
Yes, that is. I went to a real estate and blockchain conference not that long ago, and it's definitely coming. There's a lot of people that are pioneering it. That's not how I am spending my time. I am monitoring it, watching it. It's been done. Like for example, I think it was the St. Regis Hotel in Aspen. I think a part of the equity capital stack was put on a blockchain, so it gave people. It's basically like creating a secondary market. To your point, to be able to have people, be able to come in and go as they please.
They call it
still haven't
tokenization, right? They tokenize these pieces of the whole asset into parts.
Yeah. No, it's definitely, it makes a lot of sense. I mean, the blockchain technology will make it secure. I just haven't seen. I'm waiting for it to really take off before I actually get serious about it because. And to be honest, I think for the investors that are coming into my deals, they don't want or need the liquidity.
Mm-hmm.
So, but I agree. I mean, that is one of the biggest downsides to a syndication is that it's a liquid asset.
Right.
And also, we have seen when people, when we exit a deal, maybe sooner than we had originally projected, or maybe later, but usually sooner, they get kind of upset. They're like, I wanted you to hold on to this and keep it, invested in this project. it becomes a new problem for them to have to figure out where to reinvest those funds.
Yeah.
So we prefer to, keep things more stable and predictable by owning things for a longer period of time. And we're very transparent about what the plan is on the front end. But if somebody comes along and wants to pay us a stupid price for, buying for a property, then, we'll consider it. We may sell it.
Yeah. Well, then you could just give them an opportunity to roll those funds into your next project, right? You probably have something sitting that's just being, fundraised at the moment that they could roll into, and they already trust you and your team. So it's logical sense they say, just keep it.
That's true. That's typically how it goes.
Yeah. So, there's probably a lot of people that are listening to this who are thinking, I want to learn more about investing in triple net, industrial. How do they learn more? Like, can they find you online? Do you have a place they can go and learn more, a website or social media?
Yes. I'd welcome connecting with people through my website. First is roosterequity.com. I'm on all the socials at Ben Kogut. My last name is spelled Kogut. And always happy to meet new people. So grateful for that.
Awesome. Well, Ben, thank you so much for taking the time. I really appreciate it. It's just days before Thanksgiving, and you probably got all kinds of plans and things you got to organize. So thanks for being here. I really appreciate it.
Likewise, Benson. I appreciate it as well.
Awesome. And everybody, thank you for listening to this edition of the REI Hacker Podcast. Keep an eye out for more amazing guests like Ben in the future, where we talk about real estate, investing, entrepreneurship, and business. And we'll see you guys next time. Take care.